Hello, my name is Nur Aini, and my student ID number is 244111077. In this video, I will be discussing the topic of General Journal. Don't forget to like, comment and share. Yap. Enjoy watching. General Journal. A general journal is a book where all financial transactions are recorded in detail and in chronological order. Transaction analysis. Before we create a general journal, we need to understand the transaction analysis. Account titles. Assets. 1. Cash. 2. Accounts receivable. 3. Supply. 4. Equipment. 5. Vehicles. Liabilities. 1. Accounts payable. 2. Notes payable. Equity. 1. Capital. 2. Prive. Revenue. 1. Service revenue. Expenses. 1. Salaries expense. 2. Rent expense. 3. Advertising expense. 4. Utilities expense. 5. Telephone expense. Debit or credit. How do we know whether to debit or credit an account? When assets increase, the amount is recorded on the debit side. Conversely, when assets decrease, the amount is recorded on the credit side. Example question. Mrs. Ratna established a travel agency named Jaya Travel. The following are the transactions that occurred at Jaya Travel during the month of August 2022. 1. Mrs. Ratna invested cash into the business as initial capital amounting to 35 million Indonesian rupiah. 2. The company purchased office equipment for 3,500,000 Indonesian rupiah. 3. Mrs. Ratna paid employee salaries for the month of August amounting to 2,500,000 Indonesian rupiah. 4. The company borrowed money from the bank amounting to 15 million Indonesian rupiah. 5. The company received daily car rental income of 150,000 Indonesian rupiah. 6. The company received monthly car rental income of 3 million Indonesian rupiah. 7. Mrs. Ratna withdrew cash from the business for personal use amounting to 3 million Indonesian rupiah. Explanation. 1. Cash is debited and capital is credited. This means that when you receive cash, you increase the cash account, debit, and increase the owner's equity, capital, account, credit. This typically happens when you invest your own money into the business. 2. Equipment is debited and cash is credited. When you purchase equipment using cash, you increase the equipment account, debit, and decrease the cash account, credit. 3. Wages expense is debited and cash is credited. When you pay wages to employees, you increase the wages expense account, debit, and decrease the cash account, credit. 4. Cash is debited and accounts payable is credited. When you borrow money or purchase goods on credit, you increase the cash account, debit, and increase the accounts payable account, credit. This represents a liability that you owe to others. 5. Cash is debited and service revenue is credited. When you receive cash for providing a service, you increase the cash account, debit, and increase the service revenue account, credit. 6. Cash is debited and service revenue is credited. This is similar to number 5, but it specifically refers to revenue earned on a monthly basis. 7. Withdraw is debited and cash is credited. When the owner takes money out of the business for personal use, you increase the withdrawals account, debit, and decrease the cash account, credit. After recording all transactions correctly, we sum up the debits and credits for each column. In this case, the total is Rp. 62,150,000. That's all from me for this topic. I hope this material is beneficial to you. Thank you for watching. See you in the next video.
Bye. Bye.